Okay, so first of all, welcome everyone to this AMA. I'm here with co-founder Henri Pihkala. We're going to be discussing the next round of Streamr Improvement Proposals and answering your questions. So first, I thought it would be good to start with a brief introduction to what we're trying to achieve with this governance voting, and maybe very briefly how the actual voting process works.
Should I describe that?
Please, yeah.
Do you want it? Yeah, sure. So what we're trying to achieve is, of course, to give the token holders the power to steer the future of the project. This is a key element, I think, in building something like Streamr, where the goal is not to have like us, the Streamr team, deciding about things. That's a convenient start for any project, that it's kind of centralized how the decision making happens. But as the project becomes more mature and grows in terms of number of stakeholders, participants, builders, applications, it becomes increasingly more important to have that diversity and that everyone has a voice to steer the project. And sort of there's many different levels of building a decentralized governance system, from like very heavyweight ones with like a constitution and elections and a council, like for something like Polkadot, or you can have a lightweight one like we have at Streamr, where basically there's this voting tool, basically where proposals are put up on a tool called Snapshot, and people can go and vote with their wallets. And the voting doesn't cost any gas, which is great because the gas prices on Ethereum are now very high. So it's basically free to vote. And you do need to have the tokens in your wallet at the time when the sort of balance snapshot is taken, which will be on Monday. So yeah, if you want to vote, then don't leave your tokens into an exchange. So withdraw them into your wallet so that you will be able to vote. Yeah, and having tokens on exchanges is anyway not the best practice, so best to have them in your wallet.
Okay, great.
And Matthew has made a great video about how the voting works,
Yeah.
and I think it can be found. I just saw it somewhere.
It's anyway, pinned to the governance channel, and it's in most of the blogs.
Right.
So
Yeah, so we're going to keep tweeting that out, so it should help people to participate.
Mm-hmm. Great. So we have a few Streamr Improvement Proposals to get through today. So we're going to go through them one by one with your questions. Yeah.
Let's do it.
So
let's start. There's two more substantial ones. I think like SIP 3 and 6. 3 and 6 are probably the sort of most controversial ones, while 4 and 5 are kind of straightforward.
Yeah.
So I'm expecting the most questions to come from 3 and 6.
Yeah, that's right. So let's start with 3 then. If you could just give a quick summary of what's being proposed here, and then we can get into the community's questions.
Sure. So SIP 3 is an idea that we thought we'd put forward to the community to get your feedback on that. The idea is basically whether to sort of spin off or demerge the data unions framework into a project and a token of its own. And to give you a bit of background there, data unions framework has been built as part of the Streamr project as a sort of interesting use case, or to help build this kind of interesting use cases where crowds of people who are using a particular app or connected device or something like this can together pool data into a single stream or data product that then gets sold, and the revenue is shared among those who provided data. So it's kind of, if you think about it like this, that the sort of beef of the Streamr project, the meat of it is the Streamr network, and then data unions is something that comes on top, sort of sits between higher level applications and interacts with the Streamr network in a certain way. And now with the data unions project or the data unions product, we are in a kind of stable position between milestones. So this spring we shipped the data unions 2.0, which was a major upgrade in terms of security and composability and this kind of thing. So big update. And now is the time to think where to go next, right? So it's sort of like it's starting to reach a stage of maturity where it could be, justified to have a project of its own for this. And it's okay to have it under the Streamr umbrella. I mean, it's worked okay this far, so it's in no way a problem. But it's more like it could be an opportunity to create something new and gain a bit more focus on both projects. So right now under Streamr, we're sort of split between, for example, what do we communicate? It's very hard to build two things under one brand, and especially when last year when we were making a lot of noise about data unions, some people even understood that Streamr is actually just about data unions, right? Just because we were sending out that kind of message. So we sort of accidentally buried our main thing a little bit, which is the Streamr network, under this data unions communication. So yeah, it's very hard to tell two stories at the same time. So if there was a separate brand and identity for data unions, it would have its own token, it would have its own Twitter handle, it would have its own website. It would be like a sort of separate project that still ties into the Streamr project by being part of a stack of technologies using which you can build data union applications, but it will sort of have an identity of its own. And it can also create value on its own, in the sense that now the sort of value of both ecosystems are captured by the data token, which also means that the decisions are made using the voting power of the data token. So if the main thing for the data holders to optimize is basically to create the Streamr network and influence that and create, participate in the token economy of that. So the data union thing is always sort of like a second child in that sense, that it gets a little bit less attention from that point of view of what the purpose of the token is. So if it would be sort of forked into another token, then you could have like specifically designed token economics and use of the token for data unions only. And there's significant pros and cons for each approach. I think there's an opportunity now, definitely. And now is the right time to make the decision, first of all. And secondly, I think it could add value to the sort of total ecosystem, both the data ecosystem as well as create a new ecosystem around the union token by spinning it off. But on the other hand, there's also arguments against that. Maybe it confuses things even more. Maybe it's a distraction, and maybe it's harder to run two different things rather than run two different products under one project. But I think especially for data unions, there's an opportunity to really form like a community around that, because there's already a number of builders in that ecosystem that are building specifically data unions. They should have a stake in that ecosystem and have governance power in that over those things that concern data unions specifically, right? So it's much harder to give significant stake somehow of data tokens to a data union builder than these union tokens. So yeah, maybe I'll just stop here. My introduction is getting too long. We can dive into the questions, but that's the thinking behind it. Like, should they have like a voice and an identity of its own to allow better focus for both tokens and for both projects?
So one question that ties in with that is about the technical connection, really. So, and I think the main concern some people had was, will the data unions framework still be tied to the network and the existing data token?
Yeah, the short answer is yes, but it's a bit more complicated than that. So to understand what it really is, so data unions is basically like a layer on top, right? So it's not directly dependent on the Streamr network as such. It's just like layers of a stack. You can use one or the other, or neither one or both, or whatever you want, basically. But the way that we recommend it to be used, of course, is to use the Streamr network, because that way you can achieve true decentralization. But you could use the data unions framework already now with some kind of other method for collecting or distributing the data, but pretty much the only other option is to do it in a centralized way, right? And then the power of data unions is sort of undermined if you make a centralized data union. It's no longer delivering on its unique value proposals of you being in control of your data, and you getting like benefits from that in an automatic and trustless fashion. So all the tooling that we are building on the Streamr side is assuming that these things are being used together, but already now there's nothing that really forces you to use the Streamr network as the transport underneath the data unions. The data unions is sort of just like a revenue sharing framework, and needs a bit of glue in between to make the connection between the data transport and the data unions layer of things. So definitely, like in this, if the proposal passes and the union DAO and token get created, then Streamr network continues to be like part of the stack that the DAO will promote in all kind of materials. Like, okay, this is how you build data unions, right? So you use this and you use this and you use this, and then it all works. But maybe in the long run it will become more diverse. Maybe there's different options that you can use. So Streamr network will of course aim to be the best at doing that kind of thing. Yeah, that's the answer.
Okay. Touching back onto the brand separation, is there a precedent for this kind of thing happening in other projects that you've seen or that you take an example from?
Yeah, well, sure. It's if you think about the traditional startup world, or the traditional business, demergers happen all the time. So a company splits into two, for example. In the crypto space, it hasn't happened that much. I think, of course, there's been hard forks, like there's the Ethereum Classic and Ethereum. So that's kind of a demerger, but that was like really like a hard fork. This would be more like a friendly spoon or something like that. So, but of course, there's also like venture studios that create many different projects and different products. For example, Consensus has many different products under them. They make MetaMask, they make Infura, they make this and that, right? So they're not building products under the Consensus name that you'd have, like Consensus Wallet or Consensus Node as a service thing, but instead these things have unique and separate names and separate teams and separate websites and so on. And this could also be one mode in which things can be built also in the Streamr ecosystem, that you'd have the name Streamr, meaning mostly the network, and then you could have the name data unions, meaning mostly that product and that token ecosystem. So is it like dilution for the brand, or is it actually strengthening the brand by making it more specific about a particular thing. That's the question we're voting about, I guess. So, in my opinion, it would allow these things to focus more clearly on particular things and optimize the sort of local space of those products instead of trying to capture everything. Also, there's some crypto projects where several tokens are involved. Sometimes there's like a different token for a different purpose. There could be a governance token and a payment token separately. Like in the Maker project, you have the Maker token for governance, and then of course you have the DAI stablecoin. Also, I think in the Aragon project, they have several tokens that were specific to the sort of sub products that they make. There's the Aragon Court, and then there's something else and something else. And they had specific tokens for each of those. I don't know if they have that anymore. It's just something that I paid attention to at some point in time. So yeah, there's more examples in the traditional space, but also in the crypto space.
Sure. Okay. So another general question. Maybe you can discuss a bit about the funding for data unions and why you think this will help solve that issue. Is it an issue? How have prospective builders found raising funds for their data unions? Why not the traditional route?
I guess this question is related to one of the ideas that we have on the data union track in general, the springboard idea. So the springboard is like a portal or fundraising. A fundraising portal would be maybe a good idea that would sort of define the life cycle of data unions and allow them to raise funding. Initially, we thought we could build this into a sort of launchpad kind of thing or an ICO platform or whatever, but that seems a bit overkill as there are so many of those already out there. So probably it would be more like informational site and listing basically the different data unions that exist. And then if some of them are raising funds, then we can sort of point to where that fundraising is happening. So, of course, there's many ways for data unions to raise funding. They can do traditional equity rounds, they can do token launches, which is actually a good idea, I think, and plays well also in the union ecosystem if these individual data unions have their own tokens. So that's something that should be encouraged, and we would also want people who want to contribute to these data unions as investors or speculators or future users, or whatever the reason is for getting those tokens, to find these projects. Maybe they become users as well, and find the ways to contribute. So I think it just adds to the network effect. So if the question was like, how about the funding thing? Yeah, so data unions have many different ways. They should be treated as startups because that's what they are, essentially. And what we want to do with the union project is to create network effects among data unions so that they can sort of cross-pollinate in terms of token holders, users, everything. If you're a member of one data union, you're quite likely to also become a member of another one. If you're a token holder of one data union, you're quite likely to become a token holder of another one, right? Mm-hmm. So it starts to create this ecosystem with different kind of actors in there.
Okay. Let's talk a bit about the union token. So, besides governance of the DAO, or maybe let's just start with that. So, what are the use cases for the union token?
Yeah. So first and foremost, I think it would be a governance token. So the idea is that the data union framework and the code base of that and the general concept would sort of be under this DAO to decide about how to take it forward. and the decision making in that DAO would happen using the union token. I think the union token is also quite powerful in incentivizing these builders. So there should definitely be a supply that's available to sort of vest to these builders in the ecosystem, so that they can be stakeholders of the ecosystem that they are participating in. If I'm building a data union and I'm getting members, I'm getting revenue, I'm being successful, I should also earn these union tokens that will give me power in that ecosystem. It's a kind of nice way to do it. Also, the union token itself can be used to curate the set of data unions and to sort of, for example, this is eventually up to the DAO to decide what to really do with the token, but this is just one early idea. Could be that there could be this farming type of thing, that you could go on to the data union site or portal, and you could stake the union tokens on data unions to sort of curate or prioritize or sort of vouch for those data unions that you think are the best or most reliable, or becomes this sort of reputation metric, right? If people stake on it, and you'd perhaps earn a yield of union tokens or the data union specific tokens for participating in this little sort of reputation game, right? So you could go in there, lock your union tokens there, and farm the data union specific token out of that as a reward. Or there could be liquidity providing rewards, for example, that are directly sort of accessible from that interface or from that portal. If I have a data union and I want to have liquidity on a DEX, for example, I could create a campaign there where liquidity providers could earn union tokens or the data union specific tokens for providing liquidity. And these kind of campaigns should be easy to create from that pooling that the DAO would build, and from that site brings everything together.
Mm-hmm. A question that came up a few times relating to that is, why can't the data token be used for this? And will this take away utility from the data token?
It can, right? So if the proposal doesn't pass, that's sort of the default. Then that it will stay within the Streamr project. It will use the data token where applicable, but the problem is that the data token is not focused on data unions. It's actually focused on the Streamr network. So you could create similar games. I'm just going to call them games. Similar token games with the data token. You could have farming and incentives and these kind of things, but then it's sort of, it's not focused. So if we want to create some kind of campaign for data unions and mint a supply of tokens to reward people for participation, then those tokens are sort of away from something else, right? They are away from potentially being an incentive pool to grow the Streamr network, for example. So it's kind of like, you can have one tool, like you can have one tool and try to, both hammer a nail and saw something. Yeah, this stupid analog. It's not like, you can have a Swiss Army knife that tries to do everything, but it doesn't do any particular thing really well. Or you can have like specialized tools, like two different ones, one for the network and one for the data unions, and they can specialize. So they can be better at each task compared to the Swiss Army knife that tries to do everything, right? There's pros and cons. It's a trade-off.
Yeah. Is this part of the block science tokenomics research? And I don't know if they've given an opinion on this or.
No, the research with block science is very focused on the Streamr network. So the sort of data unions stuff is not in scope of that project. In neither scenario, right? So they're not thinking about what the data unions framework should be if it stays in the data tokens scope. Nor are they thinking what would the union token economics be at this time. So it's maybe something we can involve them a little bit later, but also the sort of, they're like true scientists and researchers doing some pretty in-depth stuff. So for now, I definitely want to keep them focused on the Streamr network, as that is for sure the toughest nut to crack at this time.
Okay. So if passed, the union token will be airdropped at various intervals. Do you have to data holders? Do you have any information about that, how that will happen, the intervals likely to happen?
Yeah. So maybe just taking a step back to bring every listener in on what we're talking about. So one very important thing in launching the union token would be that a share of the supply gets airdropped to data holders. So since data unions has been so far part of the data token ecosystem, now if we split that off into another token, right, then we want something back from that, right? But doing a fork doesn't make a lot of sense necessarily, because it doesn't leave a lot of flexibility for the union DAO to pursue its own goals. So I think the reasonable share would be something like 30 to 50% airdrop to data holders, and those are available in the vote, so the community can basically decide what share they feel is the most appropriate for that. Okay, and then we go to the question itself, which was about the sort of practicalities of the airdrop. So my thinking there would be that you don't need to claim it. It would just be spread out based on the data balances. So we would send it to your wallet. This can only both ways, whether you claim it or we send it. It should definitely happen on a side chain. The gas costs on the mainnet are just so sky high. There's no way to do that there. So it would be on a side chain. And in the side chain, then it's quite easy to do it both ways. So it doesn't really matter that much. If it's a claiming thing, then it could basically vest all the time. There could be like a sort of virtual position that is calculated in a smart contract and increases over time, and then you can go and claim it like you sometimes do in these DeFi kind of ecosystems. Or it could just be a periodical airdrop kind of thing. For the user, it's easier if it's just sort of sent to your wallet, then you don't need to do anything to get it. But then you have to think about, okay, how periodic is it? Maybe it happens like once per week. Maybe, yeah, I'm thinking weekly airdrop to monthly airdrop if it's like the one where we send it to everyone's wallets. If it's the claimable bin thing, then it can be continuous.
Okay.
Yeah, no, I don't think it's yet makes sense to make a final decision about that, because we haven't even passed the SIP to show the intention of doing it. I think the practicalities of that are not that important.
Okay.
The important thing, though, is the question about, okay, what about tokens that are in an exchange, like on Binance? And that's a tricky one. It could be that the large share of the supply is in exchanges, which shouldn't be that way because it's not safe to keep your tokens in exchanges, but the reality is that quite a lot is there. And sometimes the exchanges pass those airdrops on to their users, but most of the time they don't. So for sure, we'll ask, right, and try to get them to do it. But if they don't, then there's not that much that we can do about it, right? It's if you keep your tokens in an exchange, then you will have to also accept the consequences of doing so. Like, not your keys, not your tokens. It should be remembered, and it also affects the airdrops.
There are a series of questions that maybe fall into that technicalities area about the market cap, max supply, initial starting value, and mechanisms to prevent a sell-off. There's been a few around that. I don't know if there's anything you want to touch on.
Sure. Yeah. So one important thing there was the sort of schedule. So I think, and that's why I wrote it in my proposal as well, that the airdrops should happen over time, for a fairly long time, like 24 months. The idea of that is to avoid suddenly creating a huge burst of supply into the market, but rather let it sort of roll gracefully onto the market over time. And the questions about the parameters, like what is the supply? Well, again, funny question. The number of the supply doesn't matter anything, right? What really matters is the market cap, which is the number of tokens multiplied by the price of each token. And the question, what is the value to start with? That's determined by demand and supply. It's not something that we set. Right. So in the beginning, the token will be very scarce. Like no one will have it in the beginning. And when the first airdrop happens, then some supply will enter the market, and then it goes from there. So the supply sort of builds quite slowly. But there's no way to predict what the market valuation or anything like that would be. Completely depends on the demand and supply for that.
Okay, so let's move on to the DAO element. So do you have a timeline and the next steps in mind?
To add one thing. Sure. On the previous point, like in general, it's probably like a relatively good time to launch a new token. Just generally speaking, right? Because now the market is quite active, new tokens can get attention and so on. So it's from the timing perspective, it's probably quite good time to launch the token compared to the depths of the crypto winter or something like that, when nobody really cares about new tokens and is very pessimistic about future of crypto in general. So I think there's like a reasonable optimism at the moment that does allow new token ecosystems to get built and to have the kind of critical mass or initial traction required to make those into a thing.
Mm-hmm. While we're on the subject of timing, were there any other considerations on timing? A few were asking about, as we're approaching Brubeck, it seemed like a slightly strange time.
Well, yes and no. I mean, Brubeck is like a train on tracks. It's already going forward like 200 kilometers an hour, right? Or maybe 250, right? So this doesn't divert that at all. What I would like to create rather is another train that is going like 250 kilometers per hour, the data unions train, right? So that's my goal with this proposal. Otherwise, in terms of timing, I think the data token will now go through the token migration decided in SIP 1, some months ago. So for sure, the union airdrops would happen against that new token for sure. So before the union token is created or the airdrops begin, for sure we want to first get this data token migration going onto the new token.
Okay.
And that will happen. It will start probably in June. So much of the preparations are already underway. We've been building this like token migration page where you can just go, click a button, boom, it will upgrade your tokens to the new version. Also, we've been preparing some materials to be sent to the various sites like Etherscan, CoinMarketCap, CoinGecko. They all need to be informed about this change, as well as the exchanges, of course. So that's all underway.
Okay.
And then final steps on that one will be like audit of the token contract, and then everything is ready and we can just push it out.
Mm-hmm. Okay, so let's go on to the DAO then. So would you like to introduce the DAO as you imagine it and talk a bit about the steps that would take if approved, how it might work?
Yeah. So I think in the beginning the DAO would be sort of lightweight, a little bit like the Streamr governance. Maybe they will have the voting on Snapshot as well. Ideally, however, I think both projects should go towards on-chain governance, where proposals could be like actually enforced on-chain. But that's kind of not feasible with the gas prices as they are, and also not that useful always, as many decisions can't be enforced on chain. So decisions like this, for example, whether to create a new token, well, okay, maybe that could be on chain, but anyway, steering a product into certain direction or deciding about this kind of strategic things, they're not something that can be on chain. The one important thing about a DAO is that can it be its own legal entity? Like, can it own IP? Can it be liable for things that it does, decides to do? Can it have a bank account? Traditional kind of things. Can it be a party in traditional contracts? And would be great. I think the world is going in that direction. In some jurisdictions, you can already have DAOs that are real legal entities, but I think it's quite early for that. So I think this DAO, like most DAOs, will in the beginning be sort of stewarded by the legal entities that host the team that created the DAO. So probably the company that sort of is a utility vehicle for the Streamr project will also help and steward Data Union DAO in the beginning, but in the long term it should become its own legal entity, and the same applies for Streamr, I think.
Do you think the Streamr community is large enough to absorb the creation of a DAO with the right amount of diversity? And is there a risk of it being managed poorly because of a lack of size or numbers? And I don't know if any of the research Risto did earlier in the year ties in with that.
That's probably the risk. I don't know. It sounds like this question comes from assumption that it will somehow split. If there's 100 people in the community, then it will somehow be split, that 50 stay here and 50 go there, right? But it might not actually be the case. So it's quite probable that many people in the community will be in both, especially if you're a data union builder and you're using the Streamr network for your product. Then why would you only be in the union community? I think it does create a bit of a split, in the sense that Then there's the two brands and sort of identities, like we discussed earlier. So you sort of have to decide where you want to be. But yeah, that's probably the trade-off. That's the trade-off of the focus, right? Like either you're focused on a specific thing that you're interested in, or you have a bit of a mishmash of everything under one roof, which also works okay. Like right now in the Streamr, if we look at the Streamr Discord, for example, there's channels for data unions and there's channels for the network, and it's sort of okay. And maybe it can even remain like that for a while, but in the end, if there's like significant traction, then doing that spin-off is useful anyway, just to allow the communities to specialize. Mm-hmm. Yeah. But it's a fair concern, I think, and that is exactly the risk.
Are there any existing DAOs that might be a good analog of what we'd be trying to achieve if this passes? Other projects?
Yeah, I think in the beginning, good analogs would be most of the sort of stuff that you have on Snapshot, and there's plenty of these DeFi projects or similar to the Streamr governance. I wouldn't take it in the beginning into the sort of heavier weight direction, that the kind of DAOs that you might have on some new blockchains, or maybe even the maker DAO. So it's not really about, I don't think it's really about the instrumentation of the DAO and how, the tooling and whether it's off-chain or on-chain. I don't think that's super important early on. I think what is super important early on is what is the purpose of the DAO and what are the things that it can decide about, right? And these things come from the use case and not the sort of instrumentation of the DAO. I think those are the more important things, and those important things I think are relatively clear what the Union DAO, like what is the purpose of the Data Union DAO? It's to improve and take further the Data Union framework, right? And what is being governed? It's the code and the parameters and the sort of token ecosystem of the Data Union framework.
Mm-hmm. Okay, I think we're almost ready to move on to the next sip. Is there anything else you'd like to add or cover right to this one, Henri?
No, good questions. I thought actually, like honestly, really good questions, and it's not a clear-cut choice. Like if it was an easy question, then we wouldn't need the governance. Right, it would just be obvious. But the toughest kind of questions are exactly this kind of questions, like what should be done, right? And once that's decided, what should be done, then actually doing it is the easier part, right? But no one at all has the crystal ball to see the future consequences of each decision. So this is kind of a big strategic decision. It's a risk and an opportunity to spin it off, and then keeping it under the one umbrella is like a more of a conservative choice. It's probably in some way a safer choice, but on the other hand, you're maybe then not taking advantage of the opportunity to make it into its own thing. And at the end of the day, the question is that is the sum of data token and the union token, is it bigger than the data token just by itself, right? Mm-hmm. And no one can answer this question, but it's something that has good arguments why to go there, and also good arguments why not to go there. And that's what makes it interesting, at least for me.
Okay, thank you. So let's move on to the forgotten SIPs then, SIP 4 and 5. Could you give a brief intro to SIP 4, please?
Sure. So SIP 4 is a great thing, I think. Like, people should be like very excited about this. Maybe the reason why we don't hear that much discussion about this is that it's kind of obviously good thing, I think, and very easy for everyone to support. So this is about enabling community proposals into DAO, or into the snapshot voting tool. So right now it's configured so that only the team can submit proposals. That's how we wanted to kick it off. So if you remember, the last round of voting was the very first one. So we were still sort of exploring, like, hey, how does this actually even work, right? And we got those experiences from the first round of voting, and now in this second round of voting, we would like to propose that we decide that let's enable these community votes. And what it means is that then anyone that fulfills a minimum threshold of token holdings can submit proposals to the tool, right? And what we're proposing is like a two-step process there. So if you go on Snapshot, there you can see two tabs in the future. Right now you can just see the default tab, which is where the proposal submitted by the team will be. But if you take a look at some other projects on Snapshot, it might show two tabs. One of them is called Core, and the proposals submitted by the team will go there. And there's another tab called Community, and the community submitted proposals will go under that tab, right? And once a community proposal gets enough support, then it would be upgraded to a core proposal. So we can really together then get an opportunity to sort of polish the proposal and put it into this like official track and into the quarterly governance vote sort of cadence or cycle. And the parameters there are the tricky part, like how many tokens you need to have to submit community votes, and how much support does a proposal need to get to go through to the sort of core round, if you will. And there's numbers put down in the proposal. I think the threshold for being able to submit proposals, it should be fairly low. And the goal there would be that it would be very inclusive. So basically, anyone with sort of relatively substantial number of tokens could be able to do it, but not that low that it just fills up with spam. Like if there's no threshold, then it will just be a terrible mess and will be like totally not useful. So putting a low but not zero threshold is very important there. And the proposal for that would be like 25,000 data tokens in the proposal. Fiat value of that, of course, changing every day. And then the sort of support threshold probably be good to set kind of high, in the sense that it really should get a little bit of traction from the community to go through to the round. And the proposal is 30 million data, which would be like 3% of the supply at the moment. So okay, 3% is not that much, but on the other hand, we saw in the first round that the participation rate is quite low. So from that perspective, 3% is already like relatively meaningful traction in the active community that would go and vote for this kind of stuff. So it's also a compromise, but I think the numbers can be tweaked also later. So, you know, in the next round, there can be a SIP about changing these thresholds if they're not working in an optimal way. I think it's best just to get started with that and see if the community becomes engaged and actually starts to create proposals.
Okay.
In some projects, like very popular projects like Ethereum, it's very commonplace that the community is producing proposals all the time. But for a project like Streamr, it probably doesn't happen all the time, right? But there could be some, I know there's some like awesome people in the community that are very active and sort of trying to bring things forward. And now they have another way to do it as well.
Okay, great.
Yeah. For this one, I don't think it's like a. Sometimes we make in the proposals like against, for and against arguments. I can't really think of any argument against this proposal, other than it can lead to some kind of, I don't know, maybe some rage posts in case of crypto market is crashing and everyone's panicking, and then somebody makes a proposal like, yeah, kick out Henri from the team or something like that. But so there could be some like joke proposals or some non-serious ones, but that's okay. A certain amount of noise is totally okay, but if it becomes just a total sort of mess, then it's not really helping at all. But anyway, from a perspective of democracy and from a perspective of decentralization and like a truly functioning governance, I think it's essential that anyone can submit these proposals and support them.
Yeah. Okay, let's see then. Good stuff. Okay, so yeah, same again for SIP 5, please.
Yes, then SIP 5 is about Brubeck testnets. So what we would like to do once we start to roll out Brubeck milestone of the network is to incentivize already these testnets. So sort of reward people for participating. What you basically need to do is to download a piece of software and run it on your computer for a certain duration. So these test nets will be like time limited. The first one might run for a couple of days, and the last test net might run for 2 weeks or something like that. And by participating, you can earn tokens. In Brubeck, there is no, the tokenomics are not there yet, right? But we can have a sort of like a mock version of that, by just sort of measuring who's running a node there and then distributing these tokens. So we're not going to have the actual mechanisms that are being researched and built by us and the block science guys, but rather we have this simplified version, and we can have this in Brubeck mainnet as well. But it's probably simpler to make that SIP a little bit later, and now just focus on the testnets. So this proposal is about using a little bit of the supply, minting a small supply of tokens to be distributed to the testnet participants. And this is the kind of decisions that become possible once you you have the decentralized governance. Okay, great. Then you have the possibility to have an inflationary supply thanks to SIP1. Very powerful, right? And then you have the technology to put that into use. So that brings all the pieces of the puzzle together, and these are very meaningful decisions that can be made. Now it's like a practice round for the testnet, right? But once we have mainnet on Brubeck or the next milestone Tatum, where the token economics will come into play, then this kind of decisions will become really important. Like, what is the rate of emission for the reward tokens, and what is the sort of curve that they follow? Maybe at first there's more emission, then it goes down over time, right, to bootstrap the network. And that is the very purpose of having this kind of supply, and it's proven so powerful in many different crypto projects. So I'm very glad that this opportunity was unlocked by SIP1.
That's good.
And just to go through the numbers, so this is a very small mint. It's proposing 2 million data to be reserved for the Brubeck testnet. So that's just like a 0.2% increase to the current circulating supply. So very, very small. I don't think it's meaningful in any way. Even bigger inflation is probably not that meaningful. But I think this is definitely worth it. And not all of that supply might get spent. So probably we can measure like the uptime of each node, and you earn like certain tiers there, or linearly, or you have to exceed a threshold or something. So if your node is up like 99% of the time, then maybe you get 99% of the reward or something like this. We need to think about that a little bit still, how exactly the sort of parameters of the earning works. But yeah, I think that's a minor thing that we can sort of try and figure out in the team. But rather this supply increase is something that needs to go to the SIP, as they always have to go to a SIP. So no tokens at all can be minted without passing a SIP about it.
Okay. You mentioned SIP1 and the SIP1 proposal there. Just while we're on the subject, is there anything you would like to update on those, how they're progressing? SIP1 and 2?
Yeah, I kind of already did actually update on that. So
Okay.
As I mentioned, the migration is being prepared. The migration site is being built. The materials are being prepared. So it will kick off in the summer. I'm thinking June, but of course there could be some delays. And we do want to get sort of most important players in the ecosystem on board. Like, it would be great to have Binance say that, yeah, okay, we're prepared for this. Let's do it, so that we don't have to enable the migration and then wait 3 months for some exchange to realize that, we have to do something now. Right.
Sure.
So it needs coordination. It's not only up to us, the schedule, but we're starting to get ready to kick that off.
Okay. Thank you for that. So last SIP, then SIP6, and we've got a few questions on this.
Yeah, so let me introduce you to this one. So this is a more substantial proposal again. And the idea here is to mint a supply of tokens to be sold. Right? So the goal here would be to create a long-term fund for the project, ideally one that can be invested in DeFi, so that it generates a yield, sort of like a stable generator of ongoing funding for the project. So if you think about the life cycle of a crypto project, you first launch the token, right, which we did in 2017. You raise a bunch of money to do a certain thing. You have a roadmap, and you have the funds to do the roadmap, and that's great. It works excellent, except that someday that funding will run out, right? And in a happy case, you'll be at the end of the roadmap and you'd be sort of ready. But as we know, like, nothing is ever really ready, because you get a ton of ideas while you're doing it, and you need to keep like maintaining it and improving it and making it something that will exist forever, instead of existing for 5 years or something like that. So that's the end of the roadmap and the end of the ICO funding. It's not the end, it's the beginning, right? That's when the project really starts. So that's like a 1.0 version of the thing. So it would be insane to think that that's somehow the end. But the funding is a real threat to any project. That once the ICO funding ends, and what next? And there's a couple of options there. So the sort of thing that you will do for sure. So this is sort of for granted. So you need to have the token economics in there, and in the token economics there can be a component that produces some kind of long-term maintenance revenue for the project. Usually this is in the form of some kind of network tax or transaction tax or something like this that goes into a fund, and then those funds can be used to further develop the project. But success of that kind of model depends very much on the sort of amount of adoption and traction for that project, and how big money-wise that kind of ecosystem has become by that stage. And all projects start small, right? So it's not expected that any kind of meaningful money would come out of a network tax or something like this for the project. And this is the same for everyone. The only projects that I know where this might work okay is the trading space, like DEXs and this kind of things. Like if Uniswap gets a percentage of the trading fees, that becomes something substantial, right? Because there's so much activity in that space. But for actual applications or infrastructure projects in the space, it might not be that big in the beginning. So the other approach is to raise more money, and some projects have done this already before. There's projects that have done a couple of different funding rounds. It's very common in the traditional startup space. First you do your angel rounds, then you do your Series A, then you do your Series B, Series C. So you're sort of doing many funding rounds. In the crypto space, the standard pattern is to do one big round in the beginning and hope for the best. It has pros and cons. The con is the hope for the best part, I think. But for example, Polkadot has done 2 ICOs, basically, and raised another round of funding. What Streamr would do, I think, is something like a little bit in between. So I think the goal would be to raise something like 20 million. That would be optimal. So I wouldn't know. In the ICO we raised 30 million, and that was okay, and we're totally on track with that. So it's not like we're going to run out of money tomorrow or anything like that. But I'm thinking like long term, right? Like let's say now it's 21, 22, then what about from 23 onwards, right? We'll have the version 1.0 out of Streamr. We're going to have the token economics there. Everything will be like sort of enterprise grade and ready for action. But how do we extend the lifespan of the project to infinity? Like even if we raise a bunch of funds, we don't want to actually spend those funds necessarily. What we would like to do is to get like a recurring revenue from that. So I think the DeFi space has opened a lot of opportunities that are probably not going to go away anytime soon. The yields will probably shift around. Now at the moment for stable coins you can earn like around 10%, 5 to 15 is a pretty big range, but let's say, for simplicity, like around 10% annual yield. So if the project would raise 20 million, put that into DeFi, earn 10% yield per year, the project would get 2 million per year, just a good revenue stream for maintaining the project, doing marketing, that kind of thing in the long term. And if the yields stay put, and the DEXs or whatever DeFi platforms the money is invested in don't get hacked or whatever, then this will take the project to infinity, right? It will be enough to keep it going, right? And if there's additional revenue streams to the project, like from the token economics or something like that, then this money can be used for something else, like a buy and burn mechanism or whatever you want. So the governance voting would decide what to do with this money, right? So it's not up to me or up to the team. Like, you guys decide what you want to do. If you want to take the whole pot of money and buy Dogecoin with it, then that's what you're gonna do, right? But it's probably not a smart move. But it's totally up to you guys. It's just an opportunity that we see is possible, and we could unlock it with this SIP. And how it would work is that basically the SIP, the community mandates the team to negotiate these deals. And we're already seeing, like, every now and then some VCs send us a message like, hey, how do we, we want to get these tokens. How do we get those tokens? Can we buy them directly from you? And then we're like, well, there's actually, like, there's nothing to sell. Like, we don't have anything to sell, right? The company has its treasury, but the company doesn't want to sell, so there's nothing to sell. So we have to send them away. And it might be just better to find this win-win situation where these ECs can get some tokens and the project can get some funding, right? So it becomes a win-win. And especially if the tokens are subject to a lockdown of 12 to 24 months, something like that, then also the supply increase has a very delayed effect or gets sort of spread out over time. So it's not like you mint like 100 million tokens right now and they flow to the market immediately. No, it's quite the contrary. So these tokens will go into lockup, and in a long time or over a long time period, they will be unlocked to the VC. So we'd definitely be looking for like long-term contributors in this approach, I think. Mm-hmm. And the market is very volatile. So if let's imagine that. Okay, maybe I'll stop here and let's go to the questions, because I think there will be. I don't need to preempt all the questions.
No, that's good. You've covered a few. I think a few that we had. I think one of the main objections really was that they wouldn't be getting any potential VCs, if this is passed, wouldn't be getting them at market price. And I don't know if there's anything else you want to say on that. Like why do that? Do you have anything in mind on that? Or
sorry, what was the question?
Well, one of the main objections is that VCs might be getting if they buy them directly from the streamer, that they might be getting them at a lower rate than the market price.
They like for the lockdown, they will need some kind of benefit in exchange. Yeah. Right. Like if there's no lockdown, they could just go and buy it from the market. Mm-hmm. Right. But in exchange, they usually ask for a discount, right? And in exchange for the discount, they can agree to the lockdown. And I think it's a good deal. The token price is so volatile that, even if you give like 10%, 20% discount, it doesn't really matter, because the price is going up 10%, 20% like every week, if not every day. So I think the lockdown is much more valuable than any discount that is negotiated with these parties. So I think it's a pretty good approach. Right now, the market has been again on a downturn. So if we have the goal of raising 20 million from this supply, then that would require an average deal price of 20 cents. And now we're below that. So if new crypto winter comes and the whole thing crashes down to some low numbers, then this approach won't work. So this is definitely like an approach that is only available at reasonable value levels, which is where we've been recently. But let's see how the market goes. But the idea is to do this over a longer time. So I think this long-term fund, there's still a couple of years to go with the ICO funding. So that also means that there's a couple of years time to raise this long-term fund. So even if we pass it now, we might not do any deals for a while. We might be waiting for a price level where we can actually make this work, right? So within a couple of years, who knows where the market will be? So I think there's plenty of opportunity to actually get this done, and I think the added value is huge if the project can have a lifespan of like an infinite lifespan, right? Like how valuable is that, right? That's huge, and it's totally worth like a 10% supply increase. At least that's how I see it. Especially as the market is so volatile, it's going 10% up and down all the time. So just the inflation, just the 10% inflation, it's just noise. It's just noise in the sort of overall market, but the fundamental benefit that can be had from taking this approach is like really substantial, I think.
Mm-hmm. Would there be anything else you would expect in return from VCs if this is passed? Any other benefits?
For sure, we'd like to get good VCs into the ecosystem, and what they can usually provide is connections and support and this kind of thing. I'm sure there are already plenty of VCs in the ecosystem, but they're not particularly vocal. They've probably been there from the early days, and some of them are sort of public, like Fabric VC and this kind of things. We chat with them all the time, but I think in general, especially this year and last year, it has been more of a tendency for institutional players to start entering the crypto space. And this could be one vehicle or sort of funnel that will allow them to enter the data token ecosystem as well, if this kind of supply is available for that kind of players.
Okay. There's a question: would VCs potentially undermine the decentralized governance, or would it improve the decentralized governance if the tokens are more spread out? I guess the principles behind that.
I mean, I don't think any single party would have like that big of a stake to undermine that. I think it would rather be positive if these parties would really participate and drive the project forward and vote. Increasing the voting participation is anyway a goal that we have and would like to see for sure. In the first round it was quite low. Maybe it was because it was the first round and people didn't know how it works. So hopefully the participation rate will sort of steadily increase over time in these governance rounds. And I think the VCs would be really good participants in these governance rounds. And if a particular VC has like 0.5% or 1% or 1.5%, it doesn't, it doesn't compromise the decentralization of the project in any way at all, I think.
Okay. Okay, so I think we covered most of the main questions on this. Is there anything else you'd like to add that concerns you saw coming up or anticipate relating to SIP6?
Well, someone was asking on Discord a very fair question, like why not put like a minimum? Why not put a minimum price on those deals, right? And I thought that was a good question, and we did think about it, but I left it out of the proposal because it would sort of tie our hands, maybe just a tiny bit too much. Depends on what the minimum would be. Like if the minimum is 10 cents, then I think it's fine. But if we would put the minimum like too close to the target average, which was 20 cents, let's say we put it at 20 cents or 19 cents or something like this, then it might force us to miss some opportunities. If somebody comes in and says that, hey, we'd like to, participate in this at 17 cents, then we're like, it would be a good deal, but the limit is 18 or 19 cents, so we can't do it at 17 cents, right? Even if the average price, maybe a month ago somebody contributed at 25 cents, right? So we'd be well above the average, but we can't do these deals because of that hard limit that we happen to put there. So I understand that it might be useful to give some kind of guarantee, but I don't know if it helps. Like if it's quite low, like 10 cents, then it doesn't really guarantee anything either. But if it's 18 cents, then it's starting to mess with the negotiations in a way that can prevent us from taking actually good deals, but just impossible because of the limit. So I didn't put it in there. I think it's okay. Maybe there's too much discretion for us, but on the other hand, it's like, I think it's important that we make this decision together. It's the only way how to move forward with this. But I realize that the proposal is asking for a fair amount of trust in the team to negotiate these deals. We could put each deal into a separate SIP, but that would be a very slow process especially if we only have these quarterly rounds, and somebody comes in today and we have to wait until we have to wait 3 months to say like yes or no to them. It's just way too slow. So that's it.
Can you see any other potential negatives and of potentially going forward with this? And do you think, on balance, the positives outweigh it?
Yeah, I think for sure it's like very obviously positive if we can make it work. It's not guaranteed that any deals will be made, right? Maybe the VCs don't agree to it. Maybe they don't want to lock up. I know there's plenty of inquiries that don't want a lockup. But these are probably some kind of pump and dump operation. They try to buy tokens at minus 20%, and then the next day they go to the market and sell it. So those are really obvious ones. But any serious parties, I think it's very reasonable to see if there's this kind of opportunity.
Okay, I think we're almost out of time. One question that came up was, will the team be voting on these proposals? Anything about the weighting of votes there?
Yeah. One common question is that will the company's treasury vote, right? So the company has around 10%. of the current supply, and it's a heavy vote. It's a heavy vote, right? It's probably the single biggest one that can vote in the first place. And of course, the company is, it's not dumb money. It's kind of sophisticated vote, right? So the company will probably vote in a very rational way that believes is the best for the project, but it does sort of compromise the decentralization of the vote if the voting activity is low. So last time around, in the first governance round, the company did vote, but we slipped in the vote at the very last minute, so it didn't change the results. It just improved the participation rate, right? So, but those SIP 1 and SIP 2, they were like very unanimous, so everybody agreed. So it was like almost 100% agreement in those. So it was very safe to put in the company vote there. We might do a similar thing this time around, that we wait for a bit to start to see how the votes are going, and if a particular SIP is very divided, or feels that we would sway the vote in a sort of, we don't want to brute force the vote, like if everyone else is saying yes and the company comes and says no, that's not something we're looking to do for sure. So I think then the company can just abstain from voting. It will lead to worse participation numbers, but hey, what we're really after is sort of getting the wisdom of the crowd. I think that's the most important aspect of the decentralized governance, that really you can tap into the wisdom of the crowd.
Yeah.
And whatever the crowd is, there's many kind of token holders. Some are genuinely interested in the future of the project. Some are here maybe to just speculate on the token price. In the voting, there's no way to make a distinction about the internal motives of each voter. Which might be a problem, sort of twist the results, but on the other hand, yeah, there's no right answer, but I think the company is a big stakeholder, and it should have a right to vote, for sure. And the thing that I would like to improve in this overall picture is the voting activity. So the company only has 10%, right? So it's only 10%. So if more token holders participated in the voting, then I think it would be much better balanced. And now the company vote will just swing it one way or the other, if it's a tight call. And the team members, of course, as individuals, they can vote, and they should vote, and we definitely encourage them to vote. And they might not all vote the same way. There's no unification. Yeah, I guess just to summarize, like, the company would like to vote for sure, as it is it has a right to vote because it's a token holder. But it doesn't want to swing the results too much. So I think it will only vote if it's already clear what the result will be.
Okay, thanks for that. So I think we've covered.
The right solution for that imbalance would be to get better participation rates from all token holders. Like in the first round, it was like 14%, and 10% of that came from the company's vote. So really, like, organically, we got only like 4% participation in the first governance round. This should be a lot more. So hopefully this time around it will be bigger. All the other crypto projects have the same problem, unfortunately. Even real world democracy has the same problem, that voting activity is low. not that low as 4%, right, in the real world, but it's still low, right? You have some presidential election or whatever, and then like 50-60% of people go and vote. So it's just unfortunate that people don't participate. This is one of the best ways you can participate in the project, apart from building something on top of the project, to participate in these votes. So please do participate. You have wisdom that community benefits from, so use that power, right?
Yeah, for sure. Yeah, well, thank you everyone who did send you questions. I hope we've covered most of them relating to the SIPs. I think we'll keep it mostly SIP focused as we're running out of time. But Henri, is there anything else you'd like to share or update the community on, or encourage them towards upcoming milestones?
I guess I already did my closing words on the voting, so please do vote. I hope the participation rate will go up. Otherwise, what's coming up is, of course, the Brubeck release, and that starts with the test nets. So just a brief glimpse of what's going to happen. So we'll probably run a couple of like private test nets, so that team members will just run nodes and we'll see that everything's working and so on. And then these public test nets will start. And I hope you guys can participate. The software will, the node, the broker node will be distributed probably in a couple of different ways, as a Docker image, and probably as an NPM package that you can run on Node.js. So at least sort of technical and developer type of people out there should find it very easy to participate in those. So yeah, I hope you do. It will be very interesting to see whether everything sort of works as intended. The real world is a tricky place where computers are behind firewalls and NATs and unstable connections, and all kind of funny stuff can happen. So this is exactly the kind of thing that we're trying to uncover in these test nets. Like, is the network actually able to form the intended topologies correctly, or is there like difficulty with some nodes connecting to each other and propagating data and this kind of things? So it will be very, very cool to see that. And for us to be able to see that, we need like as diverse as possible test bench for that. So it's great if you can put that node running on your computer instead of putting it in a AWS data center or something like that. Some people will do that for sure, but if you have a Raspberry Pi at home or some computer that's always on, or like a personal server or whatever box, then it's a good place to run that. Yeah, and that's the big thing that's coming out this year. And then if SIP3 passes, then the data unions will take on a slightly different form, and that will start to happen towards the end of this year for sure. And the token migration is coming up, so that's another point that will require activity on everyone's end to bother and go and click the button to ensure that you have the new version of the token. The old version will eventually sort of die out, so that the whole ecosystem will start to use the new token. So eventually, there will be limited opportunity to trade the old token anymore. For example, the liquidity on DEXs will migrate to the new one. The centralized exchanges will migrate to the new one. So pretty much the only thing you can then do anymore with the old token is to migrate it to the new one. So why not do it? Why not do it quite early on? But for sure, there will be a long tail of people who don't know how to do it or are too lazy to do it. Some people's wallets are lost and tokens are burned and whatever. So there will always remain some of these old data tokens in existence, but the majority of the ecosystem will move forward to this new version of the token.
Okay, well, thank you very much, Henri, for your time, and thank you everyone who sent in your questions. I hope we covered the main themes. If anyone has anything else they'd like to add, please do post them in the Discord, and yeah, keep following us, supporting us, and we'll keep you posted on any developments.